Hi everyone, welcome back to Beat It. And today I want to talk about small caps. Like I said, we have done many videos about small caps and Anand has spoken extensively and we have warned you guys to stay away from small caps. And beyond our warning, there have been many of you who have been interested in small caps and have been wondering, but sir, we would still like to invest in small caps. I understand that. So today's video, I thought I'd give you 9 things you should keep in mind if you're planning to invest in small caps. And though I not advise you to, I'm not encouraging you to. This is just a thought experiment, as I say, and it's just information for you. What you do with it is up to you. But I strongly do believe there is a bubble in small cap, and unless you know what you're doing, you can get burnt and hurt very badly. And these 9 principles, which I'm going to talk about investing, doesn't only apply to small caps, it applies to any kind of investment you wish to make. But it's very, very critical that you do this with small caps. That is the essence of it. I hope by the end of the video, we will understand what these 9 points are and why it's critical. And maybe I'll give you a bunch of small caps which you can use these principles on by the end of the video. I'll name some companies which you can sit and analyze and look at it further and see if you can apply this and see if you find any value in any of them. Like I said, the most important thing which you always should look at in any business, be it small cap, medium cap, large cap, is the quality of the business which you're investing in. What is the fundamental business you're looking at? What is the sector and what is the business? What is this company really doing? What are the products and services it's offering? You must really analyze that and understand that. Be it regardless of whichever company you're looking at, be it a small cap, medium cap, large cap, like I said. The other thing which after that you should look at is the intrinsic value of the company. What is the company stock value? What is the overall value of the company in terms of money, in terms of business, in terms of potential? And what is the sector been overall? This is very critical before you decide to venture down any of the further 9 steps which I'm going to talk about. And like I said, you should be doing this principle kind of analysis on any company, not only small cap, medium cap, or large cap. You should be doing this kind of analysis. And keep in mind, we are looking at investing here and we're looking at holding it for the long term. Having unrealistic expectations would lead to undue stress to yourself, and more than getting substantial returns, you will get substantial suffering. So my advice is keep your expectations, reasonable in what you're expecting. And the most important thing in investing in small cap is if it is some kind of money which you need, let's say in the next year, right? If you need to get this money back in a year's time, then stay in large cap. Do not venture in small cap. Small cap is a kind of money which is meant for, you put it in there, and as they say in those bike ads, fill it, shut it, and forget it. It's like that. So you buy something based on your analysis, like I said, these 9 points, and you believe in these companies, and you buy it and you invest into this business, and you keep an eye on it, an eagle eye on it, and then you go along for the ride on the long haul. So keep that in mind. If you have money or finances which are tight and you need to pull them out within a year or in a short frame of time, right? Year doesn't exactly mean 12 months. Sometimes if you need it in 14 months, 15 months, you should be able to take a call on it. When I say a short period of time, you should be able to pull it out. The reason why I'm saying stay in the large caps for that is for the simple reason, large cap markets are highly liquid. It's easy to sell, it's easy to exit a position. Small cap, sometimes the market can become tight in terms of trade volumes, and you can be sitting, though you're offering your share there, there may not be someone to buy it right away at that point of time. And that can be very frustrating, very scary, especially if you need the money very urgently. So that is the main reason I'm saying stay in large caps if you're looking at pulling the money out, or if you need the money very liquid, very soon, very fast. First thing which you look at is called inherent risk and market liquidity. These are notorious small caps because the way the price fluctuations go in small caps, and the reason why this price fluctuation happens in small caps is because the trade volumes are such. In a company, in a large cap company like an ITC or Tata Motors, large amounts of shares are bought and sold on a daily turnover, and you see the price transparency being there because of what is being offered and what is being bought matches very closely. So the price movements are very trackable and very minimal when it moves. But in a small cap, what happens is the amount of people playing in that, especially single stock companies, become much smaller. Believe it or not, the Indian market is much shallower than compared to the American market. So the amount of people, actually retail investors sitting and playing in it, It's not that much. And that too, when you come to the small cap, it's even smaller. So when you offer, let's say, a company, you bought a company ABC and you want to sell it, there has to be someone willing to buy it. So what happens is, let's say you go out and say, I want to sell this for 10 rupees today. You don't find anybody, but you need it. So you say, okay, I drop it to 8 rupees. I drop it to 6 rupees. Someone buys it. Then the market will hold it at 6 rupees. Then let's say the next guy comes. He offers it for 10 rupees, then 8 rupees. And someone happens to enter. At that time, they're desperate to buy this company. They don't mind taking it at 8 rupees. They buy it at 8 rupees. The price moves up. So you'll see this huge volatility in price. And when selling pressure also comes in, you'll see the prices collapse also that dramatically. And you would have pulled out any of these charts. You can see them in a short period of time where you will see any large cap moving very slowly. A small cap can fluctuate very drastically. And this is the main reason why I'm saying, if you're hell-bent on investing in this, make sure you don't need the money very fast. The second thing you should also understand is, like all markets go through a cyclical nature, small caps also go cyclical nature. They experience fluctuations in a cyclical period. So you have to learn to be patient when you're witnessing the cycle. Depending on when you've entered or when you decide to enter, you will have to be patient to see. Sometimes it can be over months, sometimes it can be over years, these cycles. So you need to be sitting and waiting and being patient. This is very true when you're looking at the current situation, where there is an explosive amount of investment happening in Indian small caps right now. Has there been a huge price shift in small caps in India? Yes, there has. If you look at the last 1 year, prices dramatically increased. But has the fundamentals of the businesses changed? They have not changed. So that gives you a good idea on how the market cycle is moving. So this is the main reason why we say be careful, because right now it's going on an uptick and seems to have lost all sense to what the earnings of the company is, or what the nature of the business is, or anything to do with the fundamentals. So this is the main reason why we say be careful when you're investing in the small cap, because the price doesn't seem to be matching what the intrinsic value of these companies are. The third most important thing which you need to look at is the fundamentals of the company. So once you pick a small cap, you want to look at what are the things you should be looking at. First is the return on equity, ROE, and the return on capital employed, ROCE. A good benchmark for these things is to minimum keep the ROE should be 15% or more, and net margin should be exceeding 11%. These metrics are good filters to help you identify small caps. Of course, debt is an important player in small caps, but realize something. Debt is treated very differently in the realm of small caps, because the reason is debt is like fertilizer. It is needed at a time when the company is growing, and how debt is needed is helps in business expansion. Not everybody is lucky to have a lot of money or a lot of investors when they start business, so they rely on debt as an instrument to help their businesses grow. So by looking at the debt alone is not a key factor. Yes, you should look at debt, right? But you should treat debt with that respect of, why is he borrowing? What is he doing with his borrowing? That you should look into his balance sheet and see a few years of the balance sheet to really understand what is happening with his debt. But also pay attention to return on equity and return on the capital employed. And like I said, ROE should be 15% and net margin should be exceeding 11%. The fourth thing which you should be looking at is sectoral analysis. Small caps are very closely tied to the sector they're in. So let's say you pick a very niche company which is dealing with a very niche product. It will be in a very specific sector. So you should pay attention to that sector. That's why I said in the beginning itself, when you're interested in a small cap, which sector are you going to be looking at? Then within that sector, which companies are you looking at? By understanding the sector and how the large caps are doing within that sector, it will give you a lot of understanding on what is happening with this small cap. And then you have to analyze and see how is this small cap placed with its large cap and sectoral performances. And what are the services and products it's offering as a niche in this sector? What makes it stand apart? What makes it grow? And how is it compared to the sector? So this is very, very important to understand how the small cap is doing, because it's just not the small cap alone you need to see. You need to see the growth prospects of that sector and how the other companies are there and what is the room for growth for this company within that sector. That is why I'm saying do sectoral analysis. The fifth thing that you should need to look at is the management quality. More important than any other thing, I would say, is this one. Is the managerial quality. the people who are running the company is very important. You need to analyze and see who are the guys who are the owners of this company. What is their share value? How much of ownership do they have of this company? Usually, in a good small cap company, the owners will be holding to 50% more ownership of the company. Usually, I'm not saying this is a dive hard rule which you have to follow, but you see that means the owner is really committed to the company and the business, and they've got skin in the game, as they say. And the quality of the owner and the management running the company is also important. That is why it's important to study the balance sheet of a small cap over a period of 2, 3, 4, 5 years. And do take time to read every single thing the leaders of this company have written, be it only in the annual report, be it in quarterly reports, be it in any investor letters, any chances of them doing media appearances and they've spoken in any forum. Do try and read and understand their mindset, because that will give you a kind of an idea on how they position their company and what they plan to do with the company in the long term. The next thing to do, the sixth thing is to see the financial strategy and dividend history of the company. If the company is paying dividends regularly, that is something to consider. If the company has retained its profits and it's in reinvesting it in the business, how is it reinvesting and why it's reinvesting is also good, and you should consider that and investigate that further. And if there's no dividend being paid out and there's no idea of investment happening, then you should definitely scrutinize this further and understand what is it doing with all the surplus cash. So this is very important to understand what it's doing with its money and how it's rewarding its investors. The seventh thing I would say you should look at is the market evaluation and the intrinsic value. This is something that you should do for all stocks, not only small caps, like I've said, but also large caps and medium caps. But the market evaluation of a stock, which is the stock price, may have complete disparity with what the intrinsic value of the business is. So you need to understand this. And if there is, for some reason, the stock price has gone through the roof and you don't see any reason for it, you should definitely stay away from it, is what my advice would be. Don't get sucked into FOMO. Don't get fooled by any kind of things you read about it or any glitzy headlines about it. If there is no reason for the market prices to be where it is from the intrinsic value of the company, I would strongly suggest that you take a big no and walk away from this, because fundamental analysis of this is very critical. The next thing which I wanted to think about is the investment approach. You have done your analysis, you picked some small caps, you did all what I've said previously, and you think, okay, I'm ready to buy now. What do I do? Let's say you have 50,000 rupees which you've been thinking of investing in small cap. My advice would be to take it a step investment process. That means do not go drop all 50,000 immediately at one shot into the market on one small cap. I would say you should consider taking a gradual approach and investing over a long period of time, so your cost averages out and the volatility is something you can see. As you keep sipping into that share and in that small cap, you'll get further understanding how the price movement is happening, how the market is reacting. You don't want to drop all your currency into a small cap that was a single one on a single day and then live to regret it. And this can happen. So it is better to slow it down and do it in steps, is what my advice would be once you've decided to start buying into it. And the last thing which I want you to keep in mind before you start doing anything is be mentally prepared for market volatility. You have to understand market downturns are temporary, market upturns are also temporary. But what you're investing is in the business and the owners of the company who are running it. You believe in them, you believe in their business, and you believe in their product or services, and you're in it for the long haul and you're willing to wait. If you're willing to do all that, then it's something worthwhile considering. I would advise you to stay away from any news which is not pertaining to your company or your sector, as I say, and focus more on that and not get swayed by the volatility of the market. Like right now, how I told you, the market is going through an upturn, an upswing. It might flip and it might collapse and the whole thing might, like a house of cards, go down very fast. So you will see your price, your portfolio go through fluctuations periodically in this kind of small cap sector. But if you hold out for the long term and you bought the right business and you bought it for the right reason, there is no reason why you should not be able to see good returns of multiple percentage points. So, like I said, small cap is not something for everyone. I would not advise new investors especially to venture into small caps. I would stay far away from it. But this video is for those of you who who know what you're doing, or who, regardless of whatever warnings I've said before, are still keen on doing it. I would hope that you would do these kind of analysis, these 9 points which I've spoken about, and think about it long and hard before you decide to invest. And like I said, once you've invested in the small cap, do decide to stay in the long term. Don't try and exit as soon as you enter. Don't put funds into the which are critical for in the short term. For me, short term is anything less than 5 years. So keep that in mind, because selling and exiting a small cap may not be as easy as buying into it sometimes due to market conditions. So I hope you enjoy the video, and I'll see you in the next one soon. Bye. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.